Hi, my dear friends. Welcome to Indigo Learns special session on consolidation. Primarily, what we intend to discuss in this session is around 3 key points in consolidation, which are of high relevance for our examinations. What are those 3 points we are talking about? The first one is pre-post acquisition. So basically, what is pre-acquisition? What is post-acquisition? Getting an understanding of that is very important. Why? To know how consolidation adjustments happen, we have this analysis of profit, which I generally call as the heart of consolidation. For that, understanding of pre-post acquisition is very critical. Okay, so that is one. Second thing is about this adjustment on dividend paid adjustment. One of the most common areas where students make mistakes in consolidation is dividend paid adjustment. So what we will do is we will make sure the concept of dividend paid is understood thoroughly, because in consolidation, if you understand the concept clearly, then the possibility of solving the problem problem will be better. Okay, so that is the second one. And the third one is about intercompany transactions. What do we mean by intercompany transactions? We are talking about intercompany transactions. There are two companies, holding company, subsidiary company. If there are transactions between them, how do we deal with those adjustments? Okay, so 3 points we will broadly talk about. Hi everyone, I think some of our friends are coming in just now. Pre-acquisition, what is pre, what is post-acquisition? Okay, so that point we'll understand a little more clearly. The second one is dividend paid adjustment, and the third one is intercompany transactions. We are doing this session through Zoom integration. So what will happen is, if you post a question, it generally takes 20 seconds of time for it to reach me. So there is a lag of 20 seconds. So just be mindful of that, stay patient and stay focused to get started. All right, now with respect to the way we want to approach this, I will be connecting this with my iPad, and I will be writing a few things. So what I wish you do as we are discussing some important concepts is, please have your notebook by your side. Please have your, I think a notebook and pen would be enough. We will not be doing too much of calculations, but we will be going into the depth of some important concepts. It will be helpful. Whatever you suddenly feel, oh wow, this is how I have to think about it, I didn't understand it earlier. So then just write down those points in your notebook, which could be helpful. And quickly, before we jump start into our sessions, please share this with your other friends, and if someone else wants to attend the session, then they can quickly join in. Okay, right, so let us start the session. Okay, I hope you are able to see my screen clearly. Please confirm if you are able to, if you have any challenge. So is my screen visible to you people? Are you able to see it clearly? Can you just respond to this before we move ahead? Okay, excellent. Now, friends, what are we not going to do in this session? This is not a session for those who have never heard about consolidation, because I am assuming that some level of understanding of consolidation you've already had through our classes, and Now in this session, we are actually improving on those concepts and we are getting greater mastery with respect to the specific topics that we have. Okay, right. So considering that, what we will do is let's jumpstart into pre and post acquisition. Okay. The question is it applicable for CA final? Of course, some concepts of consolidation cannot change, whether these are for CA inter or CA final or BCom or anywhere. These concepts of consolidation will remain the same. Okay, so even if you are doing CA, you can still for CA final you can still understand this. Okay, right. Please concentrate. We will take a few situations and understand this pre and post acquisition. Okay, right. Now, say this is a timeline. We are on 1st Jan 2000 X1 and this is 31st December 2000 X1. Okay, right. Here on, let us take a day. Okay, let us take a day. The 1st of April 2000 X1. Okay, on 1st of April 2000 X1, there is a transaction that happened. What is a transaction that happened? A company called H came and purchased, this is S Limited, okay, subsidiary limited. Okay, this company called H came and purchased shares of S. Okay. Are you able to see the timeline clearly, everyone? Are you able to see the timeline? Sorry, there's a little lag, so I'm just waiting to be sure that we are all on same page. Oh, wait. Oh, you're not able to see the timeline. That's surprising. I'm glad I asked. All right. I heard what you said. Let me check this out again. Okay. Let me see if you are able to. Okay. Now I hope this is slightly acting up. Okay. Can you tell me if you are able to see it now, the timeline? Okay, excellent. Okay, right. Now, please pay attention, friends. Here is a question where a company called H Limited purchased shares in S Limited. Okay, right. Now, the beginning of the year is 1/1/2000 X1 and the end is 31st of December 2000 X1. H invested, say, into some shares, 60% shares of this company called S on 1/4/2000 X1. Okay, right. Now, think about it. I am H and your company is S. By the time I came into your company, already there was certain amount of activity that happened in this period, right? So the activity which happened in this period is before my acquisition. We call it pre-acquisition. So this period and before, this period and before. So here you're talking about, I hope you're able to see whatever arrows I'm drawing. Okay, great. All right. Okay, now I'll continue this. Okay, now, so here you I purchased 60% into your company on 1st of April 2000x1. The entire period prior to this is called pre-acquisition period. What is it called? Pre-acquisition period. From this day, whatever you see beyond is called post-acquisition period. So as if there is a magical line we are drawing, maybe with a better color pen. Okay, right. So here there is a separator between pre-acquisition and post-acquisition. Okay, right. All the profits which the company has earned in this period will be, in fact, this period or even before that, okay, will all be called as pre-acquisition, and profits this period onwards we are calling that as post-acquisition. Why is this important? Understanding pre-acquisition, post-acquisition is very important for you to be able to divide that profit into, oh, this is pre-acquisition column, that is post-acquisition column. Because as you know, in our analysis of profits, we take the total profit, okay, the total profit, whatever is there, that total profit will be split into what is the pre-acquisition period profit, what is the post-acquisition period profit. For example, if we have P&L account for this full year, let us say the P&L show of S Limited. Obviously, I'm talking about P&L of subsidiary. Okay, P&L of subsidiary is P&L of subsidiary is 100,000, 1 lakh. Okay, P&L of subsidiary is 1 lakh. Then we have to split that into what is the pre-acquisition period and what is the post-acquisition period. So when you have to split into pre-acquisition, post-acquisition, you will basically say, depending on the date of acquisition, we might have to understand what is pre, what is post. Now, I have a question for you. If 1 lakh rupees is the profit earned in this entire period, I want to know the pre-acquisition profit. Can you tell me the pre-acquisition profit for in this situation? I'll give a 30 seconds to 1 minute for people to respond. So quickly respond, friends. What is the pre-acquisition profit in this scenario? I know we will have a lot of innovation. Hey, Pratap Sharma, regarding exams, postponement, etc., why don't you just send a message to the Indigo Learn team, first Ideal ICI, Indigo Learn team. Here we are talking about consolidation. Why don't we focus on consolidation here? Answers are pouring in. 40,000, 25,000. Are Pratap Sharma. Okay, 40,000, 25,000, 25,000, 25,000. Harry, I'm very curious how you people have gotten, how you people got 40,000. I know. I'll tell you how you people got 40,000. Sir, 1 lakh rupees is the total. 60% is our share. So 60% of 1 lakh, we will write here. 40% of 1 lakh, we will write here. So this is 40,000, sir, is what some people are saying. Huh? Right. That is how we are arriving at 40,000. And our other friends who said 25,000, it's very important, guys. I am talking about three of the most commonly made mistakes in our consolidation chapter. So please pay utmost attention. Here, when you talk about, that's okay, that's okay. Now focus on what we are discussing here. So when we talk about 1 lakh rupees being the total, and when we want to split that into pre and post acquisition, here in the post acquisition period, okay, look at this. Now, I hope the screen, whatever I just calculated is seen by all of you. So 40% of 1 lakh, 40,000, 60% of 1 lakh is 60,000. So that is how you got 40 and 60. Those of you who said 40,000, those of you who said 25,000 calculated, sir, this is 3 months. This is 9 months. So 3 by 12 into 1 lakh, which is 25,000. That is how we got 25,000 and 40,000 respectively. Okay, right, now listen. The ideal answer is, first reflex should not be either, or should not be either of these. First reflex should be, hey, what is the profit? What is the profit as on 1/4/2000 I want to know the profit position as on 1/4/2000 The first reflex should be, on the date of acquisition, what is the position of profit? See, with respect to amalgamation, we saw a few points like share price. Yes, everybody wants to calculate the share price, but in what sequence should you approach those? What is the first share price that you should look for? Oh, agreed upon value. If that is not available, then you had like that sequence, right? So I want to know, you people can just post in comments the sequence in which we agreed upon the share price. We agreed to look for the share prices. You can just post that in the comments. And now coming to the first preference, what we should have, the first preference should be for this, what is the profit position on the date of acquisition? What is the profit position on the date of acquisition? Now, if the question has maybe in some other steps, like maybe in the adjustment one, you have profit for the full year is 1 lakh and the date of acquisition is on 1/4/2000 Maybe in the third or fourth points, there might be a thing that the profit as on 1/4/2000 is 30,000. Then what value will you take? You will take 30,000. Okay. So the value given as on the date of acquisition, or the profit value given, is what you would normally consider. Okay. Right. Then comes the next question. Sir, if that is not given, what do we take? If it is not given, don't jump the gun into 25,000. If it is not given, then you should look for hint. As per the question, is the profit earned evenly over the period, or is the profit earned unevenly over the period? Maybe an examiner like me, in 6th or 7th adjustment, I might say, the company makes half of its annual profit in the first quarter or first 3 months. Then how do you understand that? If I say that the company makes half of its total profits in the first 3 months, maybe that is a season of that it's a seasonal business and that is what is happening. Then you would say, oh wait, there is a specific data point on how to calculate. Then you may say, oh, by taking that point, half of 1 lakh, 50,000 is the profit for the first 3 months, and the balance 50,000 is for the next 9 months. I hope you understood this point clearly. Is everyone clear about the first and second points? What I said, I told you the first way in which you need to, the first thing you should look for is profit position as on the date of acquisition. The second thing, profit position as on the date of acquisition. If it is available, you will take. If it is not available, then method to calculate profits. Method to calculate profits into pre and post given in the question. Okay, what is the method to calculate pre and post? So you are looking for hints, actively you are searching, is there anything regarding this, is there anything regarding this? If this is also not there, okay, then we will make an assumption that profits are earned evenly over the year. Okay, in that case you will say, sir, for 12 months it is 1 lakh, for 3 months how much will that be? Then you will say it is 25,000. Okay, so for 12 months it is 1 lakh, for 3 months how much? 25,000. You will arrive at that, but that should be the third thing what you calculate. Is everybody clear about the first 3 points what we discussed? Yeah, okay, great. So now that these 3 things are clear, we will go into some special adjustments where in pre and post we can, what kind of questions do we get and how do we need to approach it. Okay, right. Now I will continue the discussion. So I just paused. It's been like about 10 minutes of discussing this. So I just paused to hear if there are any thoughts or concerns. Good. Third point, once again. So I'm saying, if there is any, basically you're trying to calculate the way in which pre and post acquisition profits can be split. If you have a methodology, it's fine. If you don't have any methodology, then you are making an assumption. What is the assumption you are making? The assumption you are making is the profits are earned evenly and I will apply pro rata basis. Profits are earned evenly means every year, every month, equal amount of profit probability is, is earned. Because maybe equal amount of profit is earned, I will apply a proportionate method. In all 12 months, equal amount of profit was earned, and for 12 months, 1 lakh is the profit. For 3 months, how much is the profit? That is what we mean by profits are earned evenly over the year. Okay, right, fine. So now let us move ahead into the discussion that we just started, into the next aspect of discussion. So by understanding what is pre-acquisition and post-acquisition, let us take a few examples. One X1, 31st December X1, 31st 31st December X2. Okay, right. Date of acquisition is this. This is the date of acquisition. Based on what we already understood, this entire period will be called, in fact, this entire period will be called pre-acquisition. This entire period we are calling it as post-acquisition. Pre-acquisition period, where, pre-acquisition period, when I say, that period related profits should go into cost of control determination. It should go into determining whether something is relevant for goodwill capital reserve or not. Okay, so only the portion of profits which is pre-acquisition will be required to calculate the goodwill capital reserve. Post-acquisition period, whatever we have, that will go into the profits what we earn. In other words, this is profit that we purchased. This is profit we earn. Now, some of us already started saying, sir, if, say, for example, like for whatever reason, so this is 25,000 in our calculation, and this is 75,000. Okay, right. Now, sir, is entire 25,000 our share? No, as per what we saw in this 60%. In this also 60%. Okay, right. So that is why in our analysis of profit, we do this beautiful presentation. Who earned that 60? Who earned that 40? Okay, so who earned that 60? Who earned that profit? Who earned that 40? That is, after the entire analysis of profit, AOP, is done, we will have some total of, these are the pre-acquisition profits, these are the post-acquisition profits. Then you will apply what is holding company's share, maybe 60% in our example. What is the rest called? Minority interest. Okay, minority interest is 40%. So you are basically going to calculate a grid like this. How much is attributable to whom? Okay, so you may say 60% of pre-acquisition profit. Pre-acquisition profit is 25,000. Similarly, here 40% of 25,000. Similarly, here it is 60% of 75,000 and 60%, 40% of 75,000. Okay, so that way the pre-acquisition, post-acquisition profits will be split. This will go into cost of control determination. Where will this go? Cost of control determination. Cost of control is basically the calculation of whether there is goodwill or capital reserve. This is basically holding company, means our share of post-acquisition profit. This will go into consolidated profit and loss account. Okay, right. These two numbers attributable to minority will go into minority interest calculation. What is the meaning of minority interest? Basically, it is the portion of shares that we control without owning. The portion of shares that we control without owning is what we mean by minority interest. See, in these revision sessions are basically specific topics, special topics when we are discussing, we can go into the depth of some, and the others I will still touch upon to the extent that I can, but to get a very detailed understanding, you have to go to our video modules, and in those video modules we solved a lot of problems on these, and with small examples we discussed like many different nuances of consolidation. So you can get a much deeper understanding by going through our video lectures, right? Okay, now this is broadly what I wanted to touch upon regarding the pre-acquisition and post-acquisition. Now we will go into the next topic that we wanted to talk about, that is dividend paid adjustment. Is there any doubt, before I go into that, is there any doubt that anybody has regarding pre-acquisition and post-acquisition? If you have, then quickly write that. Otherwise, we will move ahead into dividend paid adjustment. That I would say is like the most important adjustment that we have in our consolidation. Very frequently mistakes are made in that dividend paid adjustment. So we will do a deep understanding to make sure we are thorough with that. I'm waiting to hear from you guys if you have any specific questions regarding dividend or regarding pre-acquisition and post-acquisition. Cost of control basically, Oja, cost of control is a calculation that we do for goodwill or capital reserve determination. What did we pay? What did we get? We do that comparison in the cost of control calculation. This number, 60% of 25,000 will go into that cost of control calculation. That is what I mean. Okay, right. Now let us go into dividend adjustment.